Thank you for this opportunity to spend a few minutes stepping back from the individual proposals we have heard about today to look at the larger picture. My name is Jason Shoup, and I am the founder and managing member of the Centers for Better Insurance. CBI is an independent, self-funded think tank with a mission to support the insurance industry to optimize the value it delivers to all stakeholders, including policyholders, employees, shareholders, and society at large. In late September, CBI developed a pandemic risk landscape, reflecting an understanding of the pandemic risk based on the COVID-19 experience so far. This pandemic risk landscape can help us evaluate the proposals we have heard about today and any others that may be developed in the coming months. That evaluation can take place along three dimensions. First, scope of exposures covered under the program. Next, targets or direct beneficiaries of the program. And third, scale of the program. The pandemic risk creates four basic financial exposures for commercial policyholders. Income, a loss of operating income or revenue, such as when a movie theater must close its doors to comply with a lockdown order. Expense, which comes in two forms: continuing operating expenses, such as payroll, rent, utilities that must continue to be paid during a lockdown. And increased operating expenses, such as when a restaurant reconfigures its operations from dine-in to delivery and curbside pickup. Impairment or damage to assets, such as the cost of decontamination of property. And finally, liabilities, such as third-party liability for transmission or obligations to infected or quarantined employees under workers' compensation laws. The pandemic risk proposals we have seen so far draw heavily on the first 3 or 6 months of the COVID-19 experience. It's no surprise then that these proposals focus on income and expense exposures. In fact, some proposals narrow in on the expense element of loss alone, and further narrow to continuing operating expenses. It may be entirely appropriate to focus a pandemic risk program on a very narrowly defined set of exposures, such as continuing operating expenses. In fact, if we look at the Paycheck Protection Program, it addressed this very narrow dimension of loss by requiring loan proceeds to be spent on payroll, rent, and utilities. However, we must acknowledge that policyholders may face other exposures during a pandemic, and insurers may be expected, rightly or wrongly, to provide solutions addressing those exposures as well. We have gotten used to very large numbers when talking about pandemic relief. The pandemic risk landscape tries to put some context around the extent of pandemic risk. Let's focus on just federal financial relief programs for 2020. We will remove state-funded programs, food programs, and increased operating costs for federal agencies. The total program cost for federal COVID-19 relief is $2.2 trillion for 2020 alone, and we know more will be necessary next year. We can break this $2.2 trillion federal commitment down into three main program targets or direct program beneficiaries. People, consisting of extraordinary unemployment benefits, household relief, and support for infected or quarantined workers. Governments at the state and local levels, and businesses, broken down into small businesses, medium and large businesses, and sector-specific relief focused on healthcare providers and airlines. The pandemic risk insurance proposals we have heard about today focus on businesses. That may be perfectly appropriate, but we should appreciate that relief targeted to businesses represents only about 2/3 of the federal COVID-19 program expenditures for 2020. Even if a pandemic risk insurance program addresses all business income losses, other programs, presumably outside of the insurance industry, must be in place to address the financial relief needs of state and local governments, as well as families. The pandemic risk landscape shows us there is a profound mismatch between the scale of pandemic program need and insurance industry capacity. Whether we consider the entire cost of COVID-19 programs for 2020 or just focus on the programs targeting businesses, it becomes clear that the scale of any meaningful program dwarfs prior insurance industry loss experiences. Looking at past claim payouts, the most that could be expected from the insurance industry is a sliver of the risk-bearing capacity necessary to address pandemic exposures. For example, the largest loss event in the insurance industry's history amounts to a fraction of what small businesses needed to cover continuing payroll, rent, and utilities for just 8 weeks under the Paycheck Protection Program. So how does the pandemic risk landscape help us evaluate the proposals we have heard today? It may be useful to think of the industry's role this way. The industry's risk-bearing capacity is a dot. We can argue whether that dot should be a little bit bigger or a little bit smaller, but it's still just a dot and will always be a dot. Our society faces the risk of enormous future pandemic losses to income, expense, assets, and liabilities. The need to cover these losses is spread out across people, governments, and businesses. For policymakers, including insurance regulators, and for the insurance industry itself, the question is where to place that dot. Perhaps just as important is to get comfortable with where that dot is not being placed and the implications for policyholders, insurers, regulators, and society at large. For example, a model based on the Paycheck Protection Program would place that dot here, focused on continuing expenses of small businesses. A Pandemic Risk Insurance Act would place that dot here to expand the scope of benefits to include lost profits and extra expenses, while opening the program to medium and large businesses. The pandemic risk landscape is a tool or framework to help us understand where a particular program proposal would focus the insurance industry's limited capacity and what pandemic risk exposures that program would leave for the insurance industry or policyholders to manage on their own or through some other program. Ultimately, we want to make certain the contributions of the insurance industry in helping society manage the risk of future pandemics is thoughtful, strategic, and effective. Thank you for this opportunity to go over the pandemic risk landscape. That document, published in September, is available with the materials from this session.